we've had a bit of a roller coaster week on U.S.-China relations with the clear signs today that things are, at least from Trump's rhetoric perspective, on the upswing. We've seen Trump in a couple different forums today, including just about an hour ago at the White House, offering really kind of optimistic commentary about where things stand with China, at least for today. He, for one, this off again, on again meeting with President Xi Jinping of China and South Korea is now apparently on again. Trump said just a little bit ago, it looks like it's going forward. He also raised the possibility of some sort of agreement when the two leaders gather. They're set to talk on the sidelines of a summit in South Korea at the end of this month. Treasury Secretary Scott Bessent also announced today that there's going to be a kind of a series of talks leading up to that meeting. The first one is going to be actually this evening here in Washington on the sidelines of the IMF annual meetings. And then there'll be a follow-up next week at about a week's time in Malaysia. This is between Bessent and China's vice premier, sort of the two top trade officials there. Overall message here is things are looking good, and it comes a week to the day after Trump kind of surprise markets to the downside with this idea of a 100% tariff, an additional 100% tariff on China over rare earth minerals and supply chains that China is looking to restrict there. Worth noting that Trump didn't take this 100% tariff off the table today. He even discussed moving it up ahead of the November one that he's promised. But the overall message you're hearing from Trump and Bessent for today, at least, is that things are looking on the upside. The relationship between Trump and Xi, they're confident at least, can kind of bring the sides together and at least maintain the status quo for the time being.
And Ben, while we have you, we know Vladimir Zelensky in Washington today with President Trump. You know, after Ben Trump's remarks, Russian oil exports, India yesterday, what did we learn today?
Yeah, we learned a bit today. So this meeting, as you mentioned, was Trump with the Ukrainian president talking about the war in Ukraine, with oil clearly a big element of it. As Trump has talked about this week, Trump claims that India is going to stop its purchases of Russian oil, which would then pressure an end to the war. If that goes forward, it's a very significant economic lever to use against Vladimir Putin and Russia because of how reliant Russia is on oil revenues. Trump reiterated that claim today. He talked about how India, in his view, has already de-escalated, even as Indian officials aren't going quite that far. There is evidence that Indian suppliers are buying a bit less Russian oil, and that's going to continue. But there's no promises from that side, at least, of zeroing out. But this is clearly a lever here. Zelensky was also talking about oil, talking about meeting with energy companies for infrastructure projects going forward. So there's a real tie-up here between the energy diplomacy, the tariff diplomacy, all these kind of things intertwined, as Indian officials are also in Washington this week, just to make things even more complex, with at the IMF meetings to talk trade as well with the Trump administration. They're trying to get a 25% tariff over Russian oil lifted, and clearly both sides are trying to kind of find a middle ground there.
I think the shutdown, Libby, I think it's day 17, Libby. So how much longer? I mean, is it a week? Is it a month? What are you telling clients? Lay out the scenarios for us.
Yeah, well, nice to be with you. I mean, I think just to your earlier point, this is actually the longest full government shutdown. The other longer shutdowns have been partial shutdowns. So this shutdown has already made history. The sort of apples to apples comparison was back in 2013, which when the government was fully shut down for 16 days. And again, now we're going on the 17th day. I don't think there's really a real end in sight. I mean, this will depend, obviously, on both sides, but the pain tolerance for this shutdown is much higher than in previous shutdowns. Republicans very comfortable with their position, and so are Democrats. They are comfortable effectively not lending their vote to reopen the government in order to shine a spotlight on these ACA subsidies, these Obamacare subsidies that are expiring at the end of the year, with notifications going out in November. So they're betting that even though voters don't like shutdowns typically, that they will reward them for, again, bringing attention to this issue, which does poll very well. So long way of saying it doesn't look like the House will be back next week. So at a minimum, that means that we're looking at the end of the month. We're telling clients November, maybe even Thanksgiving. But again, one side can capitulate tomorrow, in which case the government will reopen. But that does not look like it is imminent, at least at this point.
Do you see, Libby, is there any kind of specific pain point that could be coming that would pressure this to end? Turmoil at the airports, SNAP benefits. Do you see anything like that on the horizon?
Yeah, I mean, I personally was sitting on the tarmac at Reagan National last night for 4 hours because of some of the disruptions at ATC. So I do think that as those disruptions are more widespread, and if you remember that back in 2018, 2019, when the government was shut down partially for 34 days, that was what ended up reopening the government. It was issues with the FAA and air traffic control. So certainly that could put pressure on lawmakers to reopen the government. One pain point could have been the fact that 1.3 million active military folks would have missed their payday 2 days ago, but the president and the administration reallocated some money at the Pentagon in order to pay those people. So that sort of minimized that potential pain point. But again, we're looking, I think, theoretically, at least, into November. That is when I think Democrats are hoping that these more attention comes on these ACA subsidies. That's because a lot of folks will be notified that their premiums are increasing. And so I think they believe holding out until then makes political sense. But again, it looks like there will be more disruptions, at least at the airports and elsewhere in the government, which will have, I think, from our perspective, could potentially have meaningful impact for the economy that may not be reversible, unlike what the market assumes at this point.
Well, I want to end there, Libby. What are the implications that we as investors need to think about here? The effects of all this on the economy, on sentiment, on the Fed. What should be on our radar?
Yeah, so I think that this is the sort of the issue. I think markets have, understandably been kind of shrugging this off, political dysfunction, what have you, any economic impact largely reversible. That I think is probably true. However, the longer the shutdown happens, and because this is a full shutdown, meaning it's impacting about 1.5 million workers who are either working and not getting paid or furloughed and not getting paid, you could see changes in their consumption behavior. One missed paycheck, maybe not that big of a deal, but continuous missed paychecks actually will make a difference in how these folks consume. And 80% of the federal workforce, remember, is outside of the DC, Maryland, Virginia area. So this is not just a kind of localized impact. This could be more broadly felt. Outside of just the GDP impact, and we estimate if this goes on until November, you could see a point shaved off. Again, some of that will be reinstated, but some of that could be just lost GDP activity. But in addition to that, for a market's perspective, we're not getting any data. And that, I think, is the big rub. Not only is the Bureau of Labor Statistics not releasing data, they're also not collecting data. And that could make the Fed's decision, come FOMC and end of October, that much more difficult. I mean, we assume they will cut then, but they are not going to be getting at least a complete picture of what is happening in the economy. The last thing I'll just say is, of course, our view is there's sort of a window of weakness in terms of economic growth here. There is labor market fragility, and this could just add a kind of another wobble, if you will, to that, to that kind of that weakness or that fragility.
As the U.S. government shutdown stretches into its 16th day, chances of it being resolved before the end of the month seem slim after a 9th failed vote in the Senate on a funding bill Wednesday. Here with more Yahoo Finance Washington correspondent Ben Worschel. Ben, there doesn't seem to be a lot of motivation at this point.
For sure, yeah. So we're 9 failed votes in the Senate so far. We're set for another vote in about an hour's time at 11 a.m. That's expected to have the same result, and then after a few more votes, the Senate is set to head home for the weekend. So there's no kind of end in sight immediately on this shutdown. One tentative signal on talks that's worth tracking is Senate Majority Leader John Thune did reveal this morning that he's offered Democrats a date certain vote on this issue of Obamacare subsidies after the shutdown ends. That's a minor concession. It's not going to be enough for Democrats who want this to be happening all at the same time, but it is at least directionally a signal that talks could be in the offing there. Not this week, maybe next week, maybe weeks after that, but we're talking more and more about November as a timeline when the pressure on this heats up. The immediate question for the economy right now, I think, as markets largely have been ignoring this shutdown, is this question of Trump cutbacks, reductions in force, layoffs of government employees. We had a few developments there in the last 24 hours. Trump's budget chief talking about having thousands and thousands of layoffs as part of their overall goal here. Trump talking about cutting what he calls Democrat programs. We also had a ruling that paused these layoffs for now, although it's temporary. Trump is still going ahead promising that before the end of the week, he's going to announce more layoffs, more cuts to programs. Whether that can go in force remains to be seen. But this is clearly going to be kind of the standoff is going to continue for at least a few more days, if not more weeks.
Feels that way. Ben, let's shift gears to foreign policy. President Trump also claiming yesterday that Indian Prime Minister Modi says that his country is going to stop importing Russian oil. Listen in.
He's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, he can't do it immediately. It's a little bit of a process. But the process is going to be over with soon.
Ben, I don't believe India itself has confirmed this yet. So what do we know about this?
Correct. We don't know a lot about this beyond this claim from Trump. I mean, this comes ahead of a highly anticipated meeting tomorrow in the Oval Office between President Trump and Ukrainian President Vladimir Zelensky, and a possible call between Trump and Vladimir Putin on this issue of the war in Ukraine. And this would be a major development in terms of pressuring Putin to end the war because of his reliance on Indian oil purchases. As you mentioned, what we don't have is confirmation. We don't even have confirmation that a call occurred between Trump and Narendra Modi of India in the last few days. The Indian Foreign Ministry had some comments this morning about diversifying energy sources, talked about increased energy cooperation in the United States, but notably did not confirm or deny any plans to go to zero Russian oil purchases. There is some evidence that Indian traders are looking to cut back. There's a Reuters report from New Delhi this morning about Indian traders lessening their purchases of Russian oil, but notably not at the behest of the Indian government. So even a small decline, even if it's not what Trump is promising of zeroing out and happening soon, would be significant as it would cut into Putin's efforts. I think the larger context way to understand this is tariffs. Indian officials are also reportedly in Washington this week to talk about tariffs. There's a 25% tariff on India over this issue of purchases of Russian oil. So I think there's a calculation happening here that maybe some declines of Russian oil purchases could lead to some declines of tariffs at that 25% tariff. Whether that works out, how much it goes down in each direction, very much clearly up in the air.
Ben, thanks for keeping track of it all for us, as always. Thank you.
Well, Americans are wondering if they'll be thankful for an end to the government shutdown this Thanksgiving. But for now, standoff still remains in place across party lines. Our Washington correspondent, Ben Worskell, joining us now with the very latest. Ben.
Hey, Josh. Yeah, this afternoon we did have some news on the shutdown from the court side of things. A lawsuit brought by unions that represent federal workers did offer a preliminary ruling that does put a pause on the layoffs or in government parlance, reductions in force that the Trump administration is seeking as part of this shutdown. It was a notably pointed ruling. One of the quotes was that the Trump administration has taken advantage of the lapse to assume that all bets are off. This isn't a final ruling. This is a preliminary ruling while this judge in California decides whether to make this permanent. But it does stop a kind of key pain point that we've been watching in this shutdown. Trump has been clearly using these threats of layoffs as well as the actual layoffs we've seen so far to pressure Democrats. So he doesn't have that on the table, but it comes as both sides remain really kind of staring at each other, locked in it. We had another vote this afternoon in the Senate, exactly the same margins, another failure to reach the 60-vote margin to pass the GOP plan, as both sides, or as Republicans at least say, they're not going to negotiate and Republicans are demanding. Overall, the kind of atmosphere here in Washington is of resignation that this is people should settle in for a long shutdown. I wrote today about how the word November keeps appearing both from lawmakers and from analysts as for sort of when we should watch for the end of this shutdown. That's because early pain points have improved as as painful, and now a lot of those are shifting to the end of the month. Government or military workers or soldiers will continue to get paid until the end of the month for certain. Also, a lot of the healthcare deadlines are in November, early November as well. So a lot of people are sort of settling in for a shutdown that could last for a long time, especially as these rulings kind of lessen the pain in the short term, even as the economic costs build up over the longer term.
All right, keeping you busy. Ben, thank you, sir.
Sure thing.
The government shutdown is now in its 13th day, still with no end in sight, and the specter of a trade war between the U.S. and China reemerging after President Trump threatened to slap a 100% tariff on the world's second largest economy. That spooked Wall Street, as well as the world's central bankers. They are gathering in Washington this week for annual meetings. Here to discuss the potential risks faced by the U.S. and global economies, Lakshman Achuthan, Economic Cycle Research Institute co-founder here on set, and Robert Sockin, Citi Senior Global Economist, joining us as well. Robert, let's start with you here. So, we have obviously sort of a confluence of events, if you will. The shutdown's still going on. The president may be reigniting tensions with China. But all of this has had curiously little economic effect this year. Does anything change in the last few days?
Yeah, these are great questions. And I think, in our outlook, we are seeing reasons to believe that the tariffs will bite more as we go forward, which is going to lead to a bit of a slowdown in U.S. growth and a bit of slowdown in global growth. It's been much slower to take hold because of a lot of distortions from the tariffs. Businesses and consumers have front-loaded activity to get ahead of them, and that's going to lead to some payback. Tariffs are pushing up consumer prices more, eating into income. So we do think that things are changing and the tariffs are going to start to bite more. And so all of these stresses of the government shutdown, escalation of the tariff war with China are coming at a difficult time when the data may be starting to be moving into a softer period. So I think this just puts some more downside risk. Now, that being said, I don't think the tensions with China are going to stay where they are. I think we're going to see a de-escalation. And I do think the government shutdown, when it ends, you'll see most of that activity made up, but it is putting a lot more risk into the system at a time when we already see the risks growing of a slowdown.
Lakshman, you've been relatively optimistic here on the economy, right? Does anything that has happened change that view?
To the contrary. When we were talking a few weeks ago, we were saying we were edging towards the Goldilocks situation, which is not too bad inflation and the economy getting a bit firmer. I think if anything, oddly enough, we're closer. Moving closer. That? Yeah, it's weird, isn't it?
Walk me through that.
What gives us that? Looking at forward-looking indicators of inflation first, they've been pretty benign. We will certainly get some pass-through from the tariffs biting, as we just heard. That'll be on the good side. But overall inflation, a lot of it's services and other parts of things that we buy, it's actually easing. That pace of inflation is easing. So the fear of an inflation spiral is just not here, at least for the next couple of quarters. And the Fed is looking at the jobs market slowing from the earlier slowdown we've been having. So I think Fed's pretty easy, regardless of the headlines. The fundamentals are making them pretty easy. And then when we look at forward indicators of growth, cyclical indicators, that's different than econometric models. And those cyclical indicators have firmed a bit in the United States. And also globally, when we look at industrial activity, we're seeing some firming. Maybe just it's slowed enough that there's some pent-up demand and it's starting to kick to the upside. So on a cyclical basis, that's pretty constructive, looking at a couple quarters. And then you had the market sitting there at pretty much as high as you, how high can you go, right?
Yeah.
And we get a little bump on, a little jitter on Friday around some of this tariff talking again. I don't see it really amounting to much here. I think those fundamentals, growth and inflation, are fairly benign.
And Robert, on this front as well, I was struck this morning by a new survey from the National Association for Business Economics, NABE, N-A-B-E as it's known, that showed that economists on average are raising their forecasts for growth this year. Inflation-adjusted GDP seen at 1.8%. It was 1.3% in June. Now, that's still not like amazing growth, right? It's still sub 2% growth, but it's still better growth than had been expected. So what has contributed to that? And do you agree with that forecast? And do you think that we're going to be able to keep up that pace?
Yeah, and these are all great points. As was just mentioned, we have not really seen that slowdown take hold yet that I talked about earlier. That the economy has been quite resilient through these stresses in the U.S. and abroad, and you've seen growth forecasts move up in tandem. And even though we have a slowdown coming in the fourth quarter, potentially maybe stretching into a bit of next year, it is a much smaller and less severe slowdown and shorter than we were expecting before. So I very much agree with the tone of these forecasts being moved higher. But I would still come back to some of the risks that I mentioned. They're still there. Very high tariffs, payback from that front loading of spending, more push up in consumer prices, that there's still a lot of risk in the system. And even though that we've moved to this narrative that things have looked quite good, so they'll continue to look quite good, there are still a lot of risks that persist. And at the same time, that these risks are ongoing. You're seeing, as I mentioned, new risks being put into the system. So I agree that the tone has been quite constructive. Things have been moving in quite a positive direction, but it's still a lot of things that are hard to interpret. The labor market was mentioned, just to add a point on that. Very hard to interpret those data. It certainly has the Fed worried that you've seen a sharp slowdown in job growth. At the same time, we're seeing a lot of changes in labor demand and labor supply that argue that job growth should be moving at a lower level than it has been in the past. So I just think that what we're seeing now is a very hard labor market and economy to interpret. And I'm still probably a bit more cautious than the average forecaster, given that I think the tariffs are playing through the system still, but they're playing through slowly.
And Lakshman, we started by talking about the shutdown. And most of the economists we've been talking to are saying, well, you get that sort of bounce back in growth when it's done, but it's not good if it goes on longer.
Sure.
And not only are we on the 13th day,
Yeah.
but it doesn't seem like it's going to end on the 14th or the 15th or whatever.
Right.
So how does that factor in, if at all?
Well, I mean, as you say, it's a negative, and then you get a little bit of a bounce back around the event. I think in terms of business cycle dynamics, it's at this stage not really a big issue. It's not changing the direction of the cycle or the drivers of the economy. And those drivers of the economy, by the way, haven't changed. They've been the same for, 100 years, as long as we've had a market economy. And so watching those during periods of confusion can be extremely revealing.
What are we talking about?
For like leading indicators, like the weekly leading index or the future inflation gauge, that's growth and inflation. Those give you directional calls in the middle of all this fog. And they're telling us edging towards Goldilocks. I mean, that's weird. It's not always the message you think you're going to get,
right,
but it is what it is, and I'm here to tell you.
Okay, I'm glad you are. Lakshman and Robert, thank you so much. Appreciate it.